subscribers and all that are linked and are to have come to this channel to learn how to tape read with me and see what the markets are doing. Welcome. This is algorithmic and my algo. I'm programming it and I'm actually grooming or building the analyst in me so that I can trade in sync with the market makers in time to come. I'm greeting you from Suriname, and this is the disclaimer I would like you to pay attention to. It is the night time of the 17th of June, and we'll go to the chart. It won't take long. I think based on what I have predicted in the high time analysis and what I have seen today, it is obvious that we are for now until now not in sync with what the market our analysis had not been in sync with what the market has shown today. However, we can explain why, but we won't bother to explain. If our analysis is wrong, it is wrong. We will take we just have to resume and check what we can and see. This is the first day of the week, so it is early to say we are completely wrong. It is early to say that. What we can do is that we can make mention of or go and review the day today and check what the projection was this whole day today. I did took 3 trades and lose and took losses, all because I kept and hold on to my analysis, and it was not a great day for me, a day where I take those 3 days and then I stop. I stop because of what I what I saw the market continue to trading higher. We'll go to the intraday. Let us check the 4H. The 4H we have seen, and it is now we are in a 4H in a large busy a pattern. And busy is when we have 3 candles. Doesn't matter if it is up close green candle in this way, in this, or down close black candle. But when we have 3 candle and there is on the up close candle a gap like what we are seeing here, we are calling it busy, and it will do you well to mark it and have that on your chart. For there is a tendency that the market will reprice to either the upper quarter, the consequential encroachment, or the lower quarter of this busy. We've seen prices create a large 4H busy, and price have taken with this candle this morning, price have rally on this 4-hour time frame rally and already taken this, now you call it this buy side liquidity. It is above this high. You have buy side liquidity, and we will be looking for price to drop to this consequential encouragement, even if price will continue to rally higher. And let me make this remark. In the repertoire of the mentor, Mr. Huddleston himself, he himself had made this comment when we were creating higher high from January on to March, that he is actually doesn't have any answer to a market that is creating higher high or lower low, but to follow and continue trading in that direction. And there is where we have it. We will be looking at the market from now on and trading in the direction of this of what the market maker have given us in bullish direction, seeing that every decline is a decline to take a short-term low to rally higher, is also a decline to trade into a consequential encouragement or an inefficiency, and then to reprice higher. The way they close these two candles from this perspective suggests that they might come and run this high later in the week or next week. So we will be looking from today. If not, we see a strong change, a shift in market structure somewhere, like for us to trade way low, breach this order block, what we can call the order block main threshold, this bullish order block main threshold. If we breach it and close below it, we will be having reason to look for down prices. But for now, we'll be trading in the order flow and what the market gives us, actually trading nimble, very carefully, for we are engineering liquidity on the buy side and run it, engineer it and run it, going and creating higher highs as we go. If market turn, that is what we will be looking on the 60-minute. We are on the 60-minute. If the market turn and start trading lower, we want to see a definitely shift in market structure. And if we see the shift in market structure, we will be looking for a shift in market structure with displacement. If it leaves us a SIBI, we will consider that being a reason why the market will trade lower. We are now looking at the market that have created for us here. We have a what we call a, if I draw it to this side, it is a balanced price range, and price have stayed below it. Is a 60-minute balanced price range. From there to there, we have traded and have not traded past we have not traded past this consequential encouragement of this both balanced price range. Prices balance in this, leave this one out. We have not traded past the consequential encouragement, so we are looking at this as a balanced price range, and at the same time we see it as a SIBI. So we're looking for price to continue to respect that balanced price range. We are actually trading now from this. There is a swing low here. This is what we will be monitoring to see how price will shift, how price will trade past this swing low, and if it passes swing low with displacement and leave us some and leave us on the SIBI, we will be looking at the to enter the SIBI, trading nimble down to the sell side, but keeping in mind that it might be that they again are engineering buy side liquidity. So we will be trading these shorts very, very nimble. and it's this. There is some order block here with a SEBI. If we trade past this one, already we have cleared a lot of buy side. We are ready to make high side. This, if this swing low, if we trade past it, I will be looking for shorts, but very nimble on this chart. It's a 15 minute. Let's go to the 15 minute. I don't think we will stay too long at this day. I have experienced a beautiful thing this day. It is I have give and I have shared with people near me wonderful information about the market, and they have understood clearly what I share them about trading being investment, that we are taking with the lowest leverage. We are going into the trade and focusing to gain some profits, and it is about time and price theory. For now, what we are looking in the 15-minute chart, there is a SEBI that we are looking at right here, and if you see how prices respect the balance prices of the 60-minute balance prices, which is also a SEBI. Check at the body. The body is telling us that price is heavy. There is a, let me give this 15-minute mark. This 15-minute prices trade to the consequential encouragement of the 15-minute, and it is now going lower. So the draw of liquidity, nimble once more. The reason why we see nimble, we are seeing that the market has been trading, making higher highs, and we think that we can hold this bias this bias to trade in sync with the market. We hold the bias and then see how they engineer buy side and then go further. When we trade past this consequential encouragement at this order block mean threshold, it will be clear for us if we continue to go lower or we will just bounce in the range. It is obvious now to see that we are here having a order block. These three down up close candle, the opening of it. Here you have the state, change in the state of delivery. That is an order block with a SEBI. Is a valid order block, a bearish order block, and we'll be looking. We have seen price not yet trade to it, but trade inside the SEBI that have made this bearish order block high probable bearish order block, meaning there is indication that the market is going to go to the straight to the downside. We want to see how we will open, what London will do to these pocket of inefficiency that have been left as we have been trading higher today, making the higher highs. We are seeing a 15-minute SEBI right here, which is going to be reason busy for price to drop to it. We are now seeing here is efficient deliver. There is also another busy right here that is going to be also draw on liquidity. The market have this tendency to trade into, trade to these inefficiency to make them balance and to give us perfect delivery of price. There is also another one here that is, I'm going to consider it a like a breakaway gap to break out of this, and then I want to look at this being a base from which we have rally from. Anytime I'm checking, I'm looking at a swing high, a rally impulsive swing higher. I'm looking at what we call the market maker sell model. If I see a swing lower, I'm looking at the signatures or the parameters to see a market maker buy model. We see here, this is a 15-minute. This seems to be a low risk sell, accumulation sell. We may be going down. How far down? This was for me initially. I was focusing for us to open, not trade past this one, but then continue to drop to the daily volume imbalance, which is this is volume imbalance high, consequential encroachment, and this until this relative equal low. They all are now draw on liquidity from the for this time, and we are just going to be watching and check what we can see. I want to look at this pattern. Maybe it is a, from here we have a high, we drop to make a low, and then a failure, and then take the low. Yes, it's a smart money reversal pattern. We most likely like to see the breaker, but a failure swing is also a smart money tool. We will be watching price as it paint and deliver, and take trades as they show themselves while we as we tape read and engage the market. We will have the opening and then see what we will do. The 5-minute chart. This seems to be low risk buy, another run, and then that have not take this high. It seems to be a market maker buy sell model, where we have this is sell model. Looking at this, I'm trying to find the base of it. The base of it. This is the base of it. Price expand from the base. You see price been respecting this all here. A drop into this. Price have been expand, consolidate, expand, return to use a fair value, but consolidate, expand, and so return low risk buy, smart money refers to low risk buy, accumulation above the drop, and then we are now seeing what the first the accumulation phase. We will have like this on the other side, or a claim block on this side. It's a line that we need to watch, and this one is how I'm hunting this. I'm gonna be watching him here, and quickly I think we will reprice to below these certainly the base, below the base of this market maker. What we are looking at here is time distortion, and we will watch how the market will use, if it will be a spike and then go lower, or continue from here to trade lower to the sell side, completing the market maker sell model. That is what we are looking for this asset, the Nasdaq, the ESM. Maybe it is clearer there. The same. Yes, the same picture. Maybe the base is clearer to define right here. The base is a bit difficult to define, but it seems to be base. All these candles are lining up. This seems to be base. The Judah string drop, the expansion, return to base being 1, 2, 3, and then price start to make higher highs, and I will be looking for price to collapse and go lower. Let me see what the YM is doing. Excuse me. The trade to the current, is it current? This one is current. This is a old gap, not properly annotated. An old gap has been traded to. I want to see and check how we will trade and see the development of it going down. I have that. Let me see the DXM. A 5 minute, 15 minute. Maybe if we see price rallying somewhere much more toward the buy side, we can see 60 minutes. It will be very good to see. This is juicy. Can be a reason for price to continue rallying to that. If price continue going up, that is where we have a 60 minute. This is a 60 minute. Say price may want to come all the way up here to engage this swing high, and it will be a risk off scenario for price to go lower. We are looking at the, let's go back to the Nasdaq. I like the Nasdaq better. It's running well. I will engage the market tomorrow with the logic I just described. I am actually looking for continuity because we don't choose top and bottom. Inside the 4H, we are beginning to see that price is going to trade lower. Way in the 60 minute, the 50 minute, this seems to be a market maker sell model, a swing high, and then we see the drop to the base. If that is the case, we will take trades and enjoy seeing price action delivering after according to our model. In either way, we are going to be here and trade well. I have checked before I close. I want to check the economic calendar with you today. A very great and nice delivery. Remember this news. Remember how price used this news, and make note. I will do myself. Tomorrow we have 9:30. Also news release, 2 high impact news driver. It is enough. I think they will have enough injection to propel or to send price to complete the market maker sell model as we are here analyzing and predicting it to be the case for price delivery tomorrow. I think we'll have bank holiday, and then 2 last Thursday and Friday for trading. I think we have complete a short version of a market review and analysis. I am the consistent, profitable, independent thinking trader, and I am programming this algorithm, and I will be using it in time to trade in sync with the market makers. Bye for now.